The property insurance market in Florida has become increasingly manageable for carriers, with 2024 marking the first year in over a decade that the segment recorded an underwriting profit. Here to discuss a new report on the segment is Lauren Magro, Senior Financial Analyst with AM Best. And Lauren, following the 2024 results, how did 2025 play out?
Yeah, John, so 2025 really only extended the trends that we saw in 2024. 2025 was a historic year of profitability for the Florida composite companies. They achieved nearly $1 billion in net underwriting income alone. From a surplus perspective, surplus continued to grow significantly by over $1.5 billion in 2025. That's 70% higher than what we saw in 2024. Now, that's largely a result of net income as opposed to capital contributions, which we saw drive majority of the surplus growth in earlier years. Now, the segment continues to benefit, and these results continue to benefit from several items. The one being tort reform legislation passed in 2022. That's driven much more favorable market conditions. It's driven a healthier operating environment. DCC costs, which are a key indicator of litigation-related expenses, have continued to trend downward in each year since the reforms were put into place, which is a key indicator that the reforms are doing what they were put in place to do. The other item that really benefited results in 2025 was the lack of a named hurricane landfall. It was a very light weather year, as opposed to 2024, in which there were 3 named hurricanes that landed in Florida. So this allowed in 2025 for insurers to take these budgeted CAT dollars and turn them into a profit and bolster underwriting income. Some other items that we continue to see in the segment as benefits, improving reinsurance market capacity as well as pricing, and then a renewed focus by many carriers in Florida on underwriting discipline, risk management, and risk selection.
A dependence on reinsurance has been a long-standing feature of Florida's property market. What trends are you seeing there?
Yeah, that's correct. I mean, Florida property insurers do remain reliant on reinsurance as a risk transfer tool, predominantly given their exposure to natural catastrophes in the state. In the pre-reform environment, the trends that we saw in the reinsurance market placed additional strain on Florida companies. This was in the form of higher pricing, tighter capacity, narrowed terms and conditions. However, in the post-reform environment, we're really seeing some recognition of this healthier operating environment driven by the tort reform coming through in the reinsurance market. We're seeing this through increased capacity, through lower costs for reinsurance coverages, which is a welcome change from where we were several years back. In the June 2025 mid-year renewals, many carriers saw moderate rate decreases, but we do anticipate coming up to these June 1, 2026 renewals, more pronounced rate reductions. That's reflective of the continued success of tort reform and the continued operating environment, as well as the weather patterns in 2025, again, with no hurricanes making landfall in Florida.
So the report notes a sharp drop in insurers' defense and cost containment expenses. Lauren, do you chalk that up to market reforms?
Yeah, that's largely a result of the market reforms. The reforms, when they were enacted, provided significant change. Some of the changes, they eliminated one-way attorney's fees, prohibited assignment of benefits for residential and commercial properties, reduced the statute of limitations. All of these effects compounded together have driven meaningful reductions in the number of property lawsuits that insurers are exposed to, as well as a significant decline in litigation-related expenses. So when we look at this quantitatively, we look at DCC costs as an indicator of litigation-related expenses. So DCC costs came down to just over $131 million in 2025. That marks a 68% reduction from the prior year and an 80% drop from the high in 2022. So a significant impact there.
Barring a significant catastrophe, do you expect pricing and capacity to shift further this year? And what if there is a large hurricane? Can the market absorb that?
Yeah, I mean, barring a significant event, we do expect capacity will continue to widen. We do expect the market will continue to show additional signs of softening, driven by increased competition, driven by new entrants coming into the Florida marketplace and writing business, as well as carriers who may have pulled back from the Florida space when there was years of volatility, kind of re-emerging into the space and resuming business there. We do anticipate that will drive additional market softening and price reductions. If there is a hurricane event, insurers are in a much better position today to absorb these losses than they were several years back. Their balance sheets have been strengthened through organic capital appreciation. Insurers have really dialed in from an underwriting perspective, have deployed underwriting discipline, have implemented many risk management tools, enhanced risk selection through digital tools, through modeling, through deductible changes. All of these tools to really help them mitigate the losses that they're exposed to and to mitigate losses associated with catastrophe. So we do anticipate that they are in a better position today to absorb a loss from a catastrophe than they were in the past.
Thanks, Lauren.
Thank you, John.
That was Lauren Magro, Senior Financial Analyst with AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.